This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global physical crude oil markets are weakening because of soft refinery demand and ample supply, traders and analysts told Reuters, in a move that could spell further weakness for benchmark crude futures. The weakness indicates high interest rates and inflation are depressing consumer and industrial demand, especially in Europe, at a time when supply is rising from non-OPEC producers such as the United States. This could bolster arguments for OPEC Plus to maintain production curbs at a June 1 meeting. Demand from refiners is soft, even though their crude intake capacity has increased with the end of springtime maintenance.
Oil prices extended losses in Asia trade on Tuesday, with investors anticipating lingering U.S. inflation and higher interest rates to depress consumer and industrial demand. Brent crude futures fell 57 cents, or 0.68%, to $83.14 a barrel by 0613 GMT. U.S. West Texas Intermediate crude, WTI, slipped 58 cents, or 0.73%, to $79.22 a barrel. Both benchmarks fell less than 1% on Monday as U.S. Federal Reserve officials said they were awaiting more signs of slowing inflation before considering interest rate cuts.
Moving on to the top news in the energy sector.
President Vladimir Putin said on Monday that Russian gas output rose by 8% in the first 4 months of the year to 246.4 BCM. Putin, addressing a televised meeting of senior officials devoted to energy issues, also said Russian oil output had declined by 1.8% in the year to date to 195.7 million tons, a dip largely due to production cuts under OPEC Plus agreements. Attending the meeting was Deputy Prime Minister Alexander Novak, Russia's point man on OPEC Plus output quotas, Energy Minister Sergei Sivilev, the Deputy Head of the Presidential Administration, Maxim Oreshkin, and the head of gas giant Gazprom, Alexei Miller.
Turkey overtook Germany to become Europe's largest producer of coal-fired electricity over the first 4 months of 2024, data from energy think tank Ember shows. Turkey's 36 terawatt-hours, TWh, of coal-fired electricity output through April exceeded the 34.6 terawatt-hours produced by Germany's utilities over the same period, as well as the 31.3 terawatt-hours of coal-fired electricity in Europe's third-largest coal user, Poland. The main driver of Turkey's ascendance in regional coal rankings was a steep drop in Germany's coal use during the January to April window, which was 32% lower than the same period in 2023 and the lowest for that time frame on record. Next, we have the top news in metal markets. Copper's lightning rally to record highs may not be sustainable in the coming weeks, with action concentrated on the shipment of material to cover exposed short positions in the U.S. COMEX futures market rather than tepid demand in top consumer China. Prices on the CME Group's COMEX hit a record last week, while benchmark copper on the London Metal Exchange rocketed on Monday to an all-time peak of $11,104.50 a metric ton, having surged 28% so far this year. Analysts say copper's long-term fundamentals are strong, with a bullish outlook attached to firm demand in coming years for applications including the global clean energy transition and greater use of artificial intelligence.
4 lithium mining companies have tabled plans to produce battery-grade lithium in Zimbabwe, a government official said on Monday. Zimbabwe, Africa's top producer of lithium, which is used in electric vehicle batteries and to store renewable energy, is prodding miners to refine the mineral locally as it hopes to boost its economy. Currently, Chinese lithium miners, who dominate the sector in Zimbabwe, only produce lithium concentrates which they ship to China for further processing.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture, USDA, lowered its U.S. winter wheat crop condition rating to 49% good to excellent in a weekly crop progress report on Monday, down 1 point from a week ago and 2 points below the average estimate gathered by Reuters from 14 analysts. The crop's condition was still the highest for this time of year since 2020, USDA data showed. Weather problems in Europe and the Black Sea region have raised concerns about global supplies, which lifted benchmark Chicago Board of Trade wheat futures on Monday to their steepest rally in 10 months. Drought has been a worry for some U.S. plains wheat growers, although conditions have been improving.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.